Well, in Ntombenhle, we're seeing a bit of a pullback on our market today, but we did have strong gains on Wednesday, smaller gains yesterday. And of course, we do have that US reporting season underway in the United States. US ending higher yesterday for the 6th day running. Of course, we had results out from a couple of companies, including Google, and Google shares pulling back. Just looking at the reporting season so far, though, it looks like expectations are pretty high for those companies reporting back in Ntombenhle.
There certainly are, Stephen, but taking the week into consideration, it has been a good reporting season. Most of the results have been in line or just slightly above expectations, which has been very well received by the market. And, you know, the issues that we saw there were maybe a little bit company-specific issues. But generally, it seems that there is some improvements in those companies that have been reporting. So very welcome relief in the market. And also today is a very big day because General Electric and Bank of America are reporting. So I think all eyes just waiting for America and breaths being held until they start reporting.
Okay, just perhaps recapping on some of the results we've seen out. We had Alcoa slightly disappointing on Monday. Intel coming out with strong numbers. We had JP Morgan out with very strong numbers, up 55%. So Bank of America, would you expect another strong showing from the financial sector, just given where it's come from over the past year, because it has come off a very low base, hasn't it?
Yes, it certainly has, Stephen, and I think they've got very big shoes to fill because they are the second bank or large cap bank to report in America this week, and I think they do have very big shoes to fill. JP Morgan's results were stellar, and I think mainly what we'll be looking at is how Merrill Lynch performed in terms of that will show us the trading side of Bank of America. So yes, a very interesting afternoon in store for us today.
And of course, General Electric should give us a view of the broader US economy, because this is a company that really depends on the fortunes of the US economy, doesn't it?
Absolutely. It is a barometer of what the United States is doing, and also a global barometer. I mean, it's an icon of the American industry. So we'll also be looking very much into their results. It's also the director statements, what the directors' view of the companies are, as well as the industry that they're operating in. So yes, like I said earlier, two very, very big results coming out today.
In Ntombenhle, we saw a pullback in Asian markets this morning. Of course, our market's under pressure as well. And we do know in China there is concern about a property bubble, so some tightening just on the lending to homeowners in China. But Greece coming to the fore again, and it looks like Greece may be about to tap into those emergency loans. So some risk aversion coming to the fore. And of course, we did have that euro weakening slightly. I mean, do you think Greece is going to remain a concern for these markets?
I think, all eyes back on Greece again. Sometimes it's just problem would just go away and get solved already. But yes, it will take some time. And I think what the European Union, the IMF and the ECB will be meeting on Monday to discuss whether how actually Greece will implement its package, its aid package. So I think a lot of risk aversion starting to come into the market. We've seen some pullbacks affecting currencies as well as commodities. So going forward, to be very interesting on Monday to see how this implementation will happen and whether the aid package will indeed be used.
We'll talk about currencies being affected. One market that we don't usually focus on, it's usually pretty dull, and that's the UK market. They had that debate last night ahead of the elections. Nick Clegg, the Liberal Democrat leader, coming out apparently on top of that debate. But we did see a bit of a pullback in the pound sterling, didn't we?
Yes, we did see that. I think it's clear now that there won't be a clear winner, or to be a harder fight than was anticipated by the market in general when the May 6th deadline was proclaimed. But yeah, it's a very interesting times, I think, in Britain, and they also are not necessarily in great financial standing at the moment. So it'll be interesting as to who they elect to lead them forward. But yes, it's going to be a tough fight until the end.
We've not had much news out locally. A couple of small snippets of news coming out last night and this morning. Starting with last night's ICASA's proposal for Interconnect fees to be dropped to 69 cents. And of course, we do know that there has been a big focus on these Interconnect fees. They've already been brought down from R1.25 to 89 cents, coming down again. How is the market viewing this? Is this going to affect our telecoms operators?
Yes, of course it's going to affect the telecoms operators, but I think the market has actually received this very well. I think you and I are cell phone users, so we would actually appreciate it. And I think what we liked was that they introduced a sliding scale of tariffs, and that will be effective from July 2010. And so, you know, it is a very good thing, especially considering that transparency is now what ICASA is pulling for. Transparency in the sense that there'll be biannual reporting of relevant market data to ICASA by the industry players, and also that, you know, they'll be providing info that that is specific to their industry, that ICASA can keep up with what is happening in the telecoms industry, especially where mobile operators are concerned. So I think it is a very welcome relief. Earlier on in the week, when they came out and not having had a cost structure in place, you know, people were very disappointed and expected far more. But yes, we are very, very relieved and very happy to see that something is being done about the mobile industry, interconnection rates, and as well as termination regulations.
Of course, we had Harmony Gold Mining announcing this morning that it's going to shut some of its unprofitable shafts. And this is, of course, part of its strategy of restructuring for quality ounces. They've chatted about it a number of times on this program. So no big surprises. We knew that was going to come. But not good news, really, for the gold industry, is it?
Yeah, it's not very good news in the sense that labour will be affected. The 3,700 jobs are at stake there, and you know, they have come out and saying that retrenchment may be their last option. They're going to try and see other avenues that they can explore for the workers that are affected by these mine closures. You know, also gold production is going to be down. I think the further 3 mines that have been shut now recently, you know, I think it will bring down gold production by 170,000 ounces of gold. So, you know, but they're well on their way in to becoming a stellar company and producing the 2.2 million ounces by 2012. So, you know, there's some pain that has to be taken right now. The market also didn't like it down 2%, and whereas resources are only down 0.7% or somewhere near there. But you know, going forward, we hope that at least this will be helpful in making the company actually a little bit more fitter, a little bit more leaner. And but yes, on the job side, it's not really good news for some people.
And so, Berkeley, we had some numbers out of the United States yesterday. That was the initial weekly jobless claims number, slightly disappointing. This afternoon, we're getting out US housing starts and the University of Michigan Consumer Confidence Index. Are those key for the market? Will they be focusing on those figures?
Absolutely, Stephen. I mean, the housing data is key. It's just as key as employment data, and it will be, if housing data improves, it will show that the recovery is starting to happen, that it is getting stronger. And you know, the University of Michigan's confidence, consumer confidence levels also speak to what the consumer is doing, because they do account for about 67% of GDP. So consumer sentiment, as well as whether it's starting to translate into housing, is paramount. So yes, those are the kind of figures that we'll be seeing today. So once again, another big day for the United States.